So how much one can expect in a VC fund? So if let's say someone is joining as an analyst and then associate, so what would be the salary ranges at all the hierarchies in their career?
So when you start off, it would be like 20 to 30. If you're, so again, like you need to break down which fund you're going at.
Yeah.
Right? So if you're
Can
looking
you
at
break it down?
Yeah. So largely you can break them down into three segments, right? One is the global VC, then you have domestic VCs, and then you have the micro VCs, right? So global.
Can you give examples of
Yeah,
all
sure.
the
So
funds?
global will include the likes of Sequoia, Axel, Matrix, Nexus, Elevation, etc. Right? These are all like VCs which have onshore, offshore kind of a structure there, right? And the pace would be like the pay would be anywhere between starting at a 30, 35, ranging all the way to like 50, 60 as well. Right?
Got it. At an analyst level.
At an analyst level.
Okay. Wow.
And
They would be very stringent while hiring, I assume, right?
Yeah, it's
very
highly
particular.
stringent. Yeah. On the domestic, it's a bit lower because some of these funds function on a 330 model.
Okay.
Because
So
of the
instead of the
higher
220
management
model.
fee, they are able to like also
Got it.
pay higher, right? Domestic VCs is typically like 220, so it would be anywhere between like that 20 to 40 kind of a range is possibly
Got
the
it.
best.
So 20 to 40 lakhs per annum at an entry level.
Yeah.
And how is the growth typically? Like let's say after 3 years, like typically after how many years would you get promoted and what is the salary increment?
So it's highly a self-starter. VCs, like there'll be nobody to guide you. Like in banking, we have like a training program where you are put to teach modeling and all of that. Versus in VC, you're just thrown at a problem and asked to figure it out by yourself. So you have to be a highly self-starter.
Yeah.
And when you are doing it by yourself, the growth will also be exponential versus a hierarchical structure that is formed in banking where analyst is a 2-year or a 3-year program, and then you'll have like an associate which is a 3-year program, and then VP, and then business dictates it, right? In here, it's usually what you are able to prove. So you can start as an analyst, especially in domestic funds. You can start as an analyst, prove yourself, get some good deals, prove yourself worthy for the fund, and then you can rise to an associate in just a year. And then from associate, I've seen people who have become an IVP in just a year. It happened in my fund as well.
Okay.
Right. So the career trajectory is largely linked to how you perform. There's no like set path. But usually, if you were to define, like most global VCs recruit for a pre-MBA, so that would be like a 2 to 3 year program, right? And 80% of the class gets churned after a 2 to 3 year. They prefer to go for an MBA, and then the remaining either move on to a different opportunity or grow to become senior associate kind of a track, right? Which is essentially in the global funds a partner track. On the domestic side, you do not typically have a formal pre-MBA structure because people come in with a mindset whether they will want to continue or not, and if they don't see the fit, they usually go for an MBA. If they do see a fit, they stay back.
Can you give some examples of domestic funds also?
So domestic funds would include us, Chirate, Kalari, Bloom, K Capital, Pravega, to name a few, right?
Got it.
So yeah.
Fair. And what would the usual typical increment be after like a point in time?
So you will at a associate or a senior associate level, you'll cross the 40-50 threshold there, right?
Got it.
Yeah, and from there on as well, it's a bit of an exponential as you upgrade your titles, right?
Right. So Dhruvan, I think you will be able to answer that better. How much would be the salary ranges at different levels?
Yeah, I mean, for a market like India, I would say VC is also a very young industry here. So I think these numbers, while we average these out, there will be wide differences within that range. I would say anywhere for an analyst, I think 20, I guess, would be the median for Indian funds. 20 to 30 maybe for the larger funds. And then, I mean, we would typically at an associate level again 35 to sort of 40, 30 to 40 maybe. And then beyond that, I guess VP principal sort of gets mixed up here because we don't have such a mature industry. So I think that would be 50 and above overall. So by the time you're VP principal, whether you're coming in, so I came in as a principal after 6-7 years of IB experience. So I mean either whether you have VC experience or not probably doesn't matter at that point. But it's very rare for people to make that lateral shift from other industries. I got lucky. I mean my scenario was a little unique. But typically by the time you are a VP principal, you spend about 6-7 years in a particular domain, whether VC or otherwise. So you typically come into that range.
Right.
And then after that you have partners.
And partners, how, like, do they draw a salary or just the profit share, or like how does that work? Any idea?
Depends again. I don't think there's any simple answer to this.
Yeah.
They would draw a salary. Depends on the stage of the fund, and also the profile of the founders, of the partners. Several partners are entrepreneurs who've been extremely successful. They're starting the fund after they've sort of exited their companies. All of that also happens. So they would probably draw lesser salary. But there are some partners who are professional investors, right? So who've grown as the fund has grown. So they will probably draw a salary. But I think for a lot of them, a lot of their wealth is also linked to the fund, right? And they would also get an outside outcome at the end of the fund. So that also comes into play.
Right.
Think of I would say that, for example, when I think about Pravega, we are also a startup in a way. Like you start a fund on a particular thesis, assuming there's a gap in the market, you pull some capital, and you also have to wait 10 years to see whether it's working out or not, right? So I think it's one of the most difficult asset classes to create a legacy in, because there's so many uncontrollables. And I would say it's very easy to get distracted in VC. Because the logic is that you have to have very large outcomes in a short period of time. In a market like India that's still growing, it's still so unorganized, it's not straight. A lot of things happening. It's a very chaotic environment. So usme bhi GP market fit, as you were saying, is very important. You need to be in the right place at the right time, which also means that you might end up taking bets on trends which might probably fizzle out completely. Like what happened with Web3, for example. A lot of that money's gone nowhere.
Crypto
That's how markets are also built. It's the nature of the market to get built like that.
A lot of funds are also investing in crypto.
Which is Web3. So typically how it happens is that some technology reaches some level of maturity or consumer adoption. There's the flood of ideas that come in. Most of them don't work out. But then if the technology is strong enough, which I think it is, blockchain as a technology is what crypto is based on, that will typically persist. And there'll be other better, more mature, stable applications for it. But it's very, it can be, a lot of funds on the back of crypto have shut down, right? A lot of them put too much capital into crypto. So it's a very difficult asset class to make money in. It's high risk capital. The mortality, I guess, for VC funds is also very high. It's very easy to start a VC fund, frankly. Like, if you were to start a PE fund, it would typically have to be a larger pool of capital. You need to play larger stages. But here, if I've spent 5-6 years in the industry, I have some capital, I can gather some money and start investing as an angel and keep going from there if I have a couple of hits in the beginning. But it's very difficult to build a long career as a VC and be consistently successful.
Right.
Because the payouts are very back-ended. You need to be very patient. And you need to keep doing the same thing over and over again.
Right. That makes sense. And when you said that you guys also raise capital from the limited partners, so who would these limited partners typically be? Like, what is their profile? What's their background? And who are these people?
So, think of these as institutions. So the same people who invest in, say, a PE fund, who also invest in a VC fund. So, like how you invest in the market, you would have some debt exposure, you would have some equity exposure, you would have some money in gold and some in FDs. So typically you do this to diversify your risk, right? Similar is the case with people who invest in VC funds. So take, for example, so I think there are various classes of investors here. One is your endowment funds. Right, there are educational endowments, like, we would have large colleges like Ivy Leagues like Stanford, Harvard have large endowment funds. You would also have philanthropic endowment funds, like, for example, the Zuckerberg Initiative, or you have the Gates Foundation. These are very well-known endowments. So they typically allocate some capital to VC. Then you have institutions where you have pension funds, which are very large. The Canadians, Americans, the British, Australian, all of these manage very large long-term pools of capital. So they allocate some portion of the capital to VC funds. And then you have institutions who themselves invest, but also invest in other funds. So these are called fund of funds. And then you have wealthy individuals or entrepreneurs who've made large exits, and they're typically looking to deploy capital. And then in the last bucket is the traditional institutions. For example, a lot of Indian banks, Indian corporate houses also have some portion of money allocated to venture capital. So this is sort of the classification of who our investors are. And also, I think another reason, just coming back to my earlier point about how VC funds differentiate. For example, if it's peak, right, they are focused on sustainability. So they will have LPs who want to invest in sustainability. So now with the increasing focus on ESG goals, sustainability, right, where everybody wants to have an exposure to climate change, etc., mitigation, you have more, your investors will also have a mandate to invest certain amount of money in sustainability, which they might do directly, meaning that they might invest directly in a company that's working on a technology, or they might invest in a fund that's only investing in climate. So that's how it works. So on the back end, so those machinations are there. That's how you position your fund, and that's those kind of LPs you go behind. To raise capital also.
Got it. Fair. If you learned something new from this video, do share it with your friends and subscribe to this channel so that we can bring you the best content possible. Also, if you want to watch this entire episode, click on the link in the description box and you can go to Kushal Lodha YouTube channel and watch the entire podcast episode. Thank you so much for watching this and have an amazing day.